All right, good evening, ladies and gentlemen. This is Real Estate Trading Frank. It's approximately 8:35 p.m. Eastern Standard Time, November 28, 2017. This is a free webinar update on the markets, on stocks, on stuff that we do as traders and investors. The session will be recorded and uploaded to the YouTube channel, which I highly suggest that people who miss or want to review some of the stuff that we talk about, everything that we talk about, everything that I explain, analyze, and discuss are worth money in your pockets, and you guys know that by now. Also, also feel free to recommend Clueless Estate Trading, obviously, to your friends and referrals who are interested in making a few dollars. In fact, a lot of dollars. But if they're not interested in making money, and if they're socialists and communists and whatever they are out there, then obviously they're not going to want to make money, because that's just the way it is, right? Okay, because that's the way life is. People are strange. I've been around in this life for a little bit more than 50 years. Not that I feel 50 years. I feel like I'm in my 20s. And I'll tell you, human beings don't like making money. And when they don't make money, they make excuses. So it's all good stuff, right? It's a chain reaction to misery. So saying all that, we will make sure to recommend the Clueless Estate Trading channel, or the videos that are posted there. The free ones are all there for anyone's viewing pleasure, and more importantly, their learning pleasure. And we have had some members who have joined us in the past years and in the past couple of months, who have listened to the videos on their own, and they said, "Wow, this guy's different," and he's calling the shots before they happen. Because that's what we do at Clueless Estate Trading. We're not lemmings. We don't follow things. We don't follow emotions. We try not to. We don't follow other people. We follow what my tactical charts are showing, and the few kernel brain cells that I've left in my head. And put together, we have resounding success overall. And that's what it's all about. That's what it's all about. But there's a certain kind of, so let me make a couple of broad points here, okay? Let me go over quick, won't bore you guys, but a couple of behavioral points here. There's an old saying, right, in life, everyone wants to be rich. Everyone wants to make money. But when it comes down to it, they don't want to put the grunt work in. And the grunt work doesn't mean that picks and shovels and you sit there for 9 hours listening to, looking at charts and stuff. That's my business of doing what I do. I have a passion for this. I'm good at it. And through all my mistakes and all my things, all my errors in years past, I've learned what the markets are. So from a behavioral standpoint, very, very, very few, I mean very few, very few traders become successful. I would say a good 90% of them quit. Nothing wrong with that. They're just not made out of it. I mean, they're not cut for it. And they make excuses. They say they don't have time to follow. They don't have this or that, and it goes on and on. Just like any other profession, when you're not good at it, when you don't want to put the time, even though you have the potential, everyone has the potential. There's no question about it. And but if you don't want to exploit that potential, and go ahead and at least take some of the trades and make 300, 400, 500%. These are real numbers. Okay, then obviously, the interest dies away. The other thing which is extremely important and critical, which most people don't seem to realize, people are basically scared. I'm not talking about scared about the market. They're scared to learn something new. They're even scared to make money. So what happens is they give themselves again a bucket of excuses as to why they shouldn't make money. That's what they're telling their brain. They're making all the excuses, yet they can very easily, with some effort, and keeping their emotional bluster and the emotional garbage somewhat locked in the basement during market hours, okay, and be a little bit robotic. And you don't even have to do all that hard work because I do all that hard work for you. These charts that you're looking behind you are worth thousands and thousands and thousands of dollars. And for larger players, institutional players and stuff, they're worth millions of dollars, billions of dollars. But to a person who doesn't want to even bother, it's nothing. So the fear of losing, the fear of not wanting to make money. Believe me, that's what it is. All right, this ain't an Oprah show, like I say. Not Dr. Phil or Anthony Robbins. This is a fact. The fear of saying, you know what, I'm going to do that trade. I see the picture in front of me. I understand a bit of it. That's where the little grunt work comes in. And that's why you guys are here right now listening to me, because you're trying to improve yourself. And not just improve yourself. Forget all that small talk. You want to make money. And when you make money, you're very happy. It's like kids with candy and toys and Legos and God knows what. Okay? So we're doing that for you at Clueless Aid Trading. We are doing the hard, precision, high level, brainiac work of putting the structure of random candles and all kinds of charts and telling you, look, if you get in here, there's a high probability you're going to get there. Mostly on the long side now, because it's a bull market that no one wants to believe. Because the majority wakes up every morning thinking that Kim Al-Dung or whatever his name is going to basically bomb us out of existence, and God knows what. So the bottom line is that very few are believers, which is a perfect setup. Because like that old saying goes, by the time they all believe, it's almost over. And we are far from it. And this includes many of you. Includes me at certain times. And I'm not going to put that in the group. Includes many of you who are so skeptical about every move in the market. So I'll do all the hard work, as I've always said, because that's why you're in my service, for that little money that you put to cover the expenses of the service and all that stuff, and a little bit of my time, a lot of my time. Should be charging a lot more, to be honest with you guys. But the point is that with the type of performance that I deliver, I should be charging triple on a monthly rate than what I do right now. And I bet you a lot of people will stay. The ones who are making money. They know the depth and the worth of Clueless Aid Trading. But my business is not to basically raise rates. My business is to get a big, solid group together, reach a critical mass, and get a big crowd, and most of the crowd making money. Because my real source, my real worth, my real source of incomes comes from my own trading book, not the service. That is a very powerful point to make if you're ever referring people to Trent, nothing new. Bitcoin's going to 12,000. Okay, I said that to you guys when it was at 4,000, 5,000. Yeah, it's going to cross 10,000 easy. That's not a problem. It's just starting. The bubble is just starting. Believe me. Sorry, little deviation here. Trent put out there Bitcoin crossed 10,000 as if it's a great thing actually. Yeah, great. But trust me, when Grandma starts emptying the coffers and buying Bitcoin 2,000 a pop every other day like a junkie, well, that's when the bubble is going to burst. All right, we're not there yet. So, and I've said that on Stock Twits over many months. So, okay. So, bottom line is that what I is getting back to the talk. When you're referring people to my service, the first thing that they need to do is maybe listen to one of my free webinars. Okay, and if they like my personality and they and they see what tremendous forecasts and money-making trades that I'm putting out there, then they can always do the free trial or just join directly. So one of the few things that I always ask people is that we have organic marketing. We don't have digital marketing yet. That's one of the deficiencies that I've been working on for a while now. Can't seem to find anyone really capable of of doing the job of the digitally marketing this amazing content out there so people can see and flow. It'll come. It'll happen soon. And by the time there's 1,000 members, then I won't even know you guys, right? I'll be like, who? JB, Trent, like, who are you guys? No, I'm just kidding. Okay, yeah, obviously when the critical mass goes really big, I won't be able to have this personalized personal contact with individual members as much as I do now. So consider yourselves lucky. Seriously. I used to be in trading services with the big honcho. I think I mentioned that the other day. Used to come in for about 15 minutes as if the king had arrived. All right, said a few things and went away. It was just a chat room. I'm here engaging with you guys 24/7, walking you guys through things that you guys never see and keeping you guys in the right direction. So do consider yourself lucky. All right. So from a behavioral standpoint, do what is best for you, and what is best for you is a little bit of effort. Try to be as tactical as possible. Cut the emotional garbage out. My opinion, your opinion really doesn't matter. My opinion has more substance because I have more experience. I'm smarter about the markets. There's no question about it. Okay, and I understand the dynamics of international politics, domestic politics, the confluence of macroeconomics, microeconomics, the Fed, the ECB, political events that happen in very distant lands, and all kinds of cultural equations and how it'll affect the markets far better than most people out there. And that's it. So let's kick off with a couple of things here on the market, just so you know. This market is on a full-fledged move higher. I've been saying this for a while, and you're seeing this. You guys, some of you are participating, some of you are not. The ones who are not participating, I have nothing to say. You're the ones who are going to put your head on the pillow at night and say, crap, I could have made $4,000 today if I had just gone ahead and done it. People give a lot of excuse about cash. I don't buy that. The reason is that if it's a smaller amount of cash, you can double and triple it a lot quicker than a larger amount of cash. People who are real traders, and I see some of them in here today, okay, they know very well. The larger and the heavier concentration you have in one individual stock or one particular trade, the chances of you doing something stupid and either selling early or selling in panic while following my charts because of the volatility that occurs in the market on a daily basis, your chances of you losing money are bigger. Smaller amounts of money, you can sit with it. You can add a little bit. You can just move it. It's not just today that this happened, that you were getting 1,100, 1,200% on one single day on an SPX call from last night, and the one that I've been basically telling people to buy for weeks now. For example, the SPX 2610, the 2620, at one point was up close to, they closed yesterday at 75 cents, opened at $1.05, and went to $10. So if somebody walked over to you at a bar, your buddy who thinks he knows a lot about the market, say, hey, dude, I got a $1 stock tomorrow. It's going to be 10. Come on, let's throw in some money. Chances are you probably would. Because he's the guru. Well, we do this a lot. This is not the first time we have had these monster breakouts. Yes, today's one was very powerful. You're going to get this every day. You're going to get this a couple of times a year. Nowadays, it happens a lot more. The falls and the rises. So, point is that, losing my chain of thought here. So the point is that you need to, what was I saying? I forget. So the thing is, with these type of gains, they're talking about the market being a full-fledged bull market. We talked about this breakout a while ago. It was coming. Tax or no tax or whatever, it's coming. Okay, even if the tax bill doesn't pass, we'll have a quick 2 to 3% correction within 1 hour. That means the market will drop a couple of hundred points real fast. And then what? It's all going to be over? No. They're going to bounce the market again. Because the reality of the markets are that U.S. corporate U.S. Of course, the markets are somewhat overvalued. Yes, there is a large element of the corporate tax reform and very business-friendly policies by the Trump administration in play. No question about it. But there's a synchronized world growth going on. It's not just us. Japan's growing, China's growing, Vietnam's growing. All these third world development countries are growing at 6, 7, 8, 9%. That's what kids do, right? They grow fast, and then your growth spurt just stops. So we're the older kids in the block. That's the reason why we call it developed market. But developing markets, which are still in the early teenage years, right? And in analogy as a kid, they're moving. Emerging markets. So it's not that all of a sudden it's going to be a bear market. Will there be a correction? No question about it. But it's not going to be the end of the world. There is synchronized global growth. US companies are rocking. A lot of you guys are just like, we become real jingoistic, real patriotic with the flags, the hats, and God knows what. Yet, you're not involved in the markets. I'm talking about people who are not involved in the market. So where's your patriotism? US financial markets are the bedrock of US capitalism. Our power comes from our financial markets, our military, and our economy. You let one of these pillars fall apart, you're done. Because money talks and the rest of everything, crap walks. All right? That's capitalism. We are capitalists. We make money and then we have the freedom to give that money to wherever we want to give to help whatever, to help our families, to do the right thing, whatever. But without money, all you do is chirp like a little bird. So people who don't want to make money, it just boggles my mind. You'd rather slave, and I'm not saying leave your job and become a trader, because like I said, most people don't have the mentality, the mindset to be a trader. Believe me, traders are warriors. Okay, and you don't want the whole world to be a bunch of traders, obviously. So the bottom line is that, and while I'm doing this, just take a look at that chart. Just keep on looking at it. And the ones who have made money off this chart, which many of you did today, then this chart is very sexy. It's really sexy, guys, because this is about money. You bought it here, you crapped out, oh my God, here comes Kim Al-dong. I know I'm murdering his name, but sorry. But look where it turned. Exactly off this blue dotted line. That wasn't drawn after the fact. That line has been there for you guys to see since the 24th and more so since the 26th, since last week. And it touched that and boom went. How much more precise and robotically perfect can a chart get? I didn't draw that line after the thing started turning. That arrow was there. And I put it there because, okay, it's falling, big red candle. This could have, they could have down here. But I started to see the reversal. Boom, we went in again. Told people to take substantial profits along the way as it climbed these channels. Called this the bear kill zone days ago, because this is where the bears go to die. And the bears means the shorts for people who don't know what a bear is. Okay? That's what the bears basically said. Oh my God, I can't take this anymore. This is pure ridiculous. The market's like Bitcoin. It just wants to go higher. It's all a bubble. It's all fake. It's a fake economy. The Federal Reserve is crap. Trump is going to fail. Blah, 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 blah. That's all you hear in most of the chat rooms and stuff. How many bulls do you find on StockTwits or other trading forums that you look at? Not many. They're always either losing money, trying to make a little bit, and then trying to short the market. And this includes institutional hedge funds. This type of stuff does not happen. And I've said this before. It happened here. It happened all the way down here. These are big, powerful booster rockets known as breadth thrusts. Okay? Where billions of dollars just enter the market in the form of a short squeeze, where the shorts are like, oh my God, I shorted the market here. I think it's going to crash. It doesn't crash. It's starting to go. So by this time, they're like getting really nervous. They're like, oh, here comes Kim Al-dong. He's our best friend because he's going to kill the market. We're going to be down 100 points. And we just went whoop. We're up like 30 points after being up like 160. Remember? How long did it take? 30 minutes. So if you were on your own, you would know what the heck to do. You'd leave. You wouldn't have the privilege of looking at these tactical charts. You wouldn't have the absolute privilege of buying right this hammer reversal hammer right there. That wick is worth 40% on the SPX. That is worth 250%. I'm not even going to what this is worth. That is worth 250%. Do you gonna make these things up? Let me tell you. I asked people to buy the 2620 S&P calls after I told them to take some substantial profits at this level. Right there when it turned, those things were approximately $1.80 to $2. By the time this candle formed, they went to 5.5. By the time this candle formed, by the end of the day, they went to 10. If some of you still remember basic math, something goes from 2 to 10, that's 400% profits and a 5-bagger, not 500% profit, okay? This is not GED class or remedial class in math. When 2 goes to 10, that's a 5-bagger, but you are taking 400% in profits. So if you put $1,000 in, you are basically taking out $5,000 in a matter of how long? 60 minutes or less? Or if you just scalped it, this one candle scalp was good from going from 2 to almost 6, 200% profits. But no, you don't want to be a trader. You know what I'm saying? You just want to just, oh, no, I don't really trade. I just buy things and hold on. Yeah, right. As if you have the money to buy Amazon. The people who have money to buy 1,000 shares of Amazon, okay? 100 shares of Amazon, guys, is almost $12,000. That's 100 shares. So $1.2 million, trust me, very few people have to put in just one stock. Hedge funds do that. That's the reason why we play options. Because we piggyback those moves for substantial gains. Substantial gains. Okay. So what's happening in the market right now? First of all, we're coming to the end of November. This market most probably between now, I'm going to keep this very simple here because the real advanced stuff, got to sign up for the ACS classes. Want to be a stingy, whatever you want to be, and not pay that small amount to be involved in the advanced coaching session classes? Well, you are missing out on making real money. Ask the people here that I can see who have taken the ACS classes with me. Ask them directly without me even being there. Just PM them in the chat room. Ask them how much it's helped them make serious money, not pennies. Not like, oh, I'll catch it next time, kind of stupid comments that many traders make to make themselves feel kind of like warm and fuzzy. No, real money with not even that much capital. If you take $5,000, for example, or let's say you take $2,000, forget that, $2,000, okay? And you nailed a one-day move of 400%, which happened in multiple stocks today that I've recommended. Bank of America, the lottos. The lottos they were up 404%. Bank of America, 26.5 calls yesterday were 23 cents. If you tell me you can't afford 23 cents, then maybe you should leave your US passport and just go somewhere very far away and say, I just don't ever want to touch a US dollar or a dime or a quarter. I'm serious. Okay, they were 23 cents. They went to $1.20. That's 400%. So let's say, for example, you took and said, okay, $1,000. I'm going to keep on bringing it down, and you made 400% on it. You sold it. Let's say not at the top, but let's say you said, okay, let it go because the charts are going. He's recommending it. $5,000. You took home $4,000. Trust me. I know how the real world works. After taxes, after Social Security, after God knows what else deductions, very few people take home on a monthly basis $4,000 cash. You can do that in one day. with $1,000. Can you do it every day? No. But even if you did that once a month, think, guys, think. That's the problem. That's what makes America not great. People don't think. They like to wave flags and wear hats. How about putting in the work to make America great? All right? And trust me, I know. Because I truly believe in the excellence and the exceptionalism of the United States of America, more so than many of you who are listening and will be listening to this particular video. Let's move on. So, bottom line is that at this point, we're going to bring in a little bit of the what's happening is we are coming to the end of November. So we have big window dressing. I said that last week. I said that the week before. This is a window dressing phenomenon. And here's the funny part about the market, guys. Okay? And while I'm saying that, this is your monster RUT trade. There's some of you just, thanks to these charts, nailed it big time. Big time. The recent trade was put here on the 15th of November, right at that breakout level, right there. I had a caption here. I don't know where it went. Okay. I called this the megaphone pattern as I noticed the structure. Trust me. Show me somebody else out there who actually drew this chart and made this much right from the onset. I said this was going to be a swing trade, not a day trade. 1, 2, 3, 4, 5. 5 days in a row, it just ripped. That's good for almost 600% plus. Right there. So some of you who might not be traders or might be listening to me or looking at the screen and hopefully not making any silly excuses, okay? Think for a minute. Each of these candles, and in between this intraday volatility, the candles didn't just like lump on top of each other. They came down during the day, then they pulled up. But look at the formation, expansion candles. And then this today, which ripped the head out of the shorts. This today alone was 550% on the 1540 calls on the RUT November 30th, expiring 2 days from now. And we were positioning ourselves on this minor consolidation known as a bull flag. Okay? And the people who focused on my chart, and some people asked some very good questions, is that inverted hammer and stuff? Trent did. And I explained to him, no, it doesn't look like an inverted hammer on the Thinkorswim. I know what he was looking at. It just looks like a consolidation to me. Now, if it fell below this red line here, where we bought, then obviously the pattern would change. And we would adapt accordingly and possibly put out a short. But no, it held the gap. It held the upper end of the megaphone. That's a megaphone. That's what a megaphone looks like, right? And it just went berserk. It didn't go berserk from like point A, like all the way through. Staggered. But this was the end of the day result, intraday, by the time all and said was done. And this one candle was worth 550%. So what is 550%? 550% means that last night when they closed that, those 1540 calls, which we were scaling down and average costing, which which is lowering our cost base, you got to do that in a volatile market. All that garbage you hear outside, no, I just sell when it goes down, I buy when it goes up. Like, please, just take a flying leap and fall over your chair. How about that? Hurt yourself a little bit. Those are the stupidest things. Those happened in the old days. In an options trading world, if the charts are very tactical and cooperating even in difficult times, and you have somebody like me who's basically walking you through this, through the dangerous jungles of volatility, okay? Into the mind of the I would say, forget jungles, like the minefields of volatility moves, right? Each of these red candles, many of you hide under the bunkers, hugging that little teddy bear. So, and I'm showing like, okay, this is the bull flag, whatever the case may be, you know what I do. So the bottom line is, they went from $2, started scaling down, buck and change. They went to 80 cents. 80 cents. And they opened at 90. They were at $1 for the most part of the day, right? $1, $1.10. ample time to buy. And I said buy. They went to $5.81. That's 550% for people who like to understand advanced math. That's sarcastic, by the way. That's trader sarcasm. From 80 cents, they go to a 581. Forget 581. How about selling at 4? That's 400%. 5-bagger, 400%. 581 is almost 6. That's a 7, 8. That's a 700% bagger. 600%. Just this thing. Forget about the continuation that's coming. And of course, I will do the hard work of monitoring it, reading in between the tea leaves, see if anything changes. But let's talk about continuation patterns. Continuation patterns in a powerful move higher. Remember, the Russell lagged the S&P. The SPX RUT ratio was negative almost at one point. The SPX was doing so well, and the Russell's like nobody believes in the US small cap growth. No, it's not going to work. All the pundits out there, look it up, saying that the Russell 2000 is going into a bear market. There's a divergence between the overall indices, the SPX, Dow Jones Industrial Average, the QQQ, the NDX, and the Russell 2000s, the dog. Well, the dog came the lion, and it didn't become the lion just like that, because you have to vary the Russell. I make it easy by these charts, but it's a very difficult index to trade. But once you catch the flow for that period of time, you can make a lot of money. I don't need to explain to you. You did it. Some of you did it, and I'm very proud of you. So let's look at some cycles here. I said, based on my rising wedge, this green line here, even a child can read it. There's a big red arrow. A big red arrow means sell. A nice fat blue arrow or a green arrow means buy, right? Real simple. Okay. So saying all that, if you have and we've seen this in the SPX a lot. So generally speaking, I mentioned to you last time, I'll mention to you again. This trade is still a continuation trade unless it changes. Doesn't mean you're not going to have one or two quick consolidation days. You can either sell out, wait to enter, or you can sell, the large profits and keep the core and then add to it as it pulls back. That's a smart way of doing it. Not completely leaving the trade, because completely leaving the trade mentally and physically, you might not be fast or smart enough to get into it again. Because when they turn real fast. Yes or no? All right? I have no idea what you just said, JB. Get your machetes out. We're talking about some serious stuff here, so focus, all right? So here's another guy who's starting to become somewhat of a focused tactical trader. Before it was all like, and JB is a very smart guy. But you know what they say about really smart people? They tend to do a lot of stupid things. But now he's starting to do things right. So put the machetes in your pocket or under your sofa, wherever you guys keep it out there, and then just, and just hopefully never use it. So, all right, let's move on. So bottom line is that you have a continuation pattern. So if this is the case, then it's a bull flag, and the bull flag will lead to the upper end of this rising wedge right there at around 1560, which is just around the corner. 1560, it's close to 1536, all right? So you got 24 points to move from here to 1560. So 24, giving a percentage move, so you guys keep this in the back of your head, is simply a 1.5% move. All we need is a 1.56% move, or 24 points from here to arrive at the promised land, which is, in my opinion, will be a major resistance. And it probably might even come back to retest this breakout level right there, or maybe the top of the megaphone, and then move again. Or if it breaks lower, it's going lower. No question about it. That's what charts do. This is your wide channel. It's not going to go to 1680 tomorrow. This is a weekly chart, a daily chart. This takes a couple of months. If things go right with the U.S. economy, the tax thing really falls into place, then you base good night, Dale. Then you then you then it's going to get there. If things really click into place in between this type of volatility move, it will get there, but that might not happen till the first quarter of next year. A lot of things has to cooperate. Interest rates have to remain slightly, have to start moving up slowly, not like fast. I'm talking about the 10-year Treasury and the Treasury bond rates, overall interest rate environment. The political climate has to be favorable. The economic climate has to be favorable. A lot of things. But let's talk about what's at hand right now. So what we have here is we might get one of this, because this is generally what happens after, and this is called pattern recognition right there. So if that happens, it's a bull flag, and then it's going to be one more burst, and you're going to say, okay, fantastic trade. You already said that today, and you've said this for a couple of days now, if not a week or more. But you'll have now, so the ones who basically SOA'd, you know what that means, sitting on, what, is they still have, you still have some room. It's going to be very fast. It's going to be very quick. Might happen by the first, might happen by this week, to be honest with you, because this looks like a real continuation pattern, similar to this, okay? Or it might be by first week of December, because by mid-December, we're going into a nice full-fledged pullback. And then we're going to ramp up towards the latter part of the year. But the latter part of the year gets very tricky, because there's a lot of tax adjustments and all kinds of stuff that happens, bookkeeping stuff, fiscal year ending, calendar year ending, all kinds of people do like, oh, I'm going to sell this, take some profits, this holiday, blah, 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 blah. So this is the beginning of that Santa rally. Then all of a sudden, Santa's going to disappear. Maybe he'll end up in North Korea. And then they're going to release him sometime by the third week of December to come ramping in right before Christmas. And then you're going to get some big fat sell-off towards the last couple of days of the year. And then, of course, there's going to be January tax selling. That's a given. Most of the time. We shall see. Anything else can happen prior to that. This tax bill might not get fully passed. Then we're in for a quick 3-4% correction real fast. So that's your Russell right now. No more to talk about. This is very powerful. It went straight up into overbought zone, over 90, 75, 80. And it looks like it wants to move sideways. If it moves sideways like this, see? How many days did this last? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 4 days of consolidation. 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25. This was a 25-day move with a minor consolidation of 4 days. 1, 2, 3, 4, 5, 6. 1, 2, 3, 4. This is called day counts, okay? It's the old-fashioned way of looking at candles. 1, 2, 3, 4, 5. 5 days, full blast, power money. 3 days of consolidation, bull flag. That's why I wrote it there. 1, 2, 3, 4. So you could get a 10-day move here, and then you could get one of these, which it should happen like that. You don't want to keep on paying up more expensive premiums, and then it might start another move here, and I will draw more lines and I'll show you where it can go. But one thing at a time. All right, let's move on to SPX. The SPX right now is again moving sideways. That's sign of strength. Shorts getting squeezed, new money coming in. We have the first couple of days of December, new inflows from pension funds, institutional funds, all this, your 401ks and stuff, money coming into the market. They're going to pick their spots. And that's the last thing I'll cover on this particular thing. It's not like, oh, just shove the money in the market and let's go party. No. Look at the day today. Blood red on one side with Amazon. Well, Amazon was way up earlier on, then pull back. But most of the big cap techs, the Pricelines, the Apples, the Googles, they did nothing. All red. Financials did fantastic. Selected. So it's only selected stocks that did really well. And we just happen to be in majority of those powerful movers. A stock alone was up at 1.43%. A stock, not an option. The China recycling, Craig, which we have traded before, which I recommended at around a little less than 3 or less, actually, because I had a stop loss at 2. The stock went to 4 today from $2.86 yesterday. Let's say you had no idea, but when I recommended it, you got in. You could have made yourself 30% on a stock. It ended the day up 25%. So whoever wants to spin a bucket full of excuses, well, I can give you on a reasonable argument, I can show you hundreds of trades which you could have taken small bits, participated in, and made back those losses in a heartbeat. So it was all selective, and I'm going to cover that in a second. So there we are in the bear kill zone. Max move is going to be around 2640, which is right around the corner. Percentage. What is 2640? If we go there, it seems wild. Like, wow, we can go to 2640 on the S&P 500. That's only 13 points from here, guys. So 13 divided by 2627. You're talking about a move on the S&P 500 of only 0.5%. So we can, in 0.5% move on the S&P 500, gets us up to the 2640 level. Right there. Before that, can it do this? Can it even fall all the way down here on any sort of tax disappointment and stuff? Absolutely. I'll be the one to show you guys that when it's happening, we'll take opposing positions, do some very fast short trades, because in this type of market, if you do a short trade, you got to be quick. You got to make a lot of money, but you got to be quick. You sleep on the short trade, you are dead on arrival, and you'll land up in the bear cemetery. Just the way it is. That's what bull markets do. In a bear market, you do quick, fast, long trades. You get out of the way, take your profits, and you stay in a bear market. You stay generally short. In a bull market, just the opposite. So these charts are a definitive roadmap to what's going on. So 2640 is only a 0.49%, or let's call it 0.5%. 0.5%, not even 1%, 0.5% move on the S&P 500 to get there. And by that time, based on this chart at least, you'll be severe overbought. That means reset time, pullback time. Simple when you follow charts, not simple when you follow those two little voices in your heads, screaming at you and making you do stupid things, or just making you sit there. ULTA. We've been trading ULTA back and forth. Some days tough, it's down 4. It's a very highly manipulated stock, like our good friend Corey says. It's true. Some stocks are manipulated. The market's not a fair place. It's not for kids. It's for men and women who have character. It's not for kids. Well, some kids have more character than adults, so. But we stuck with the trade, and you got rewarded big time. I kept on saying this is an inverse head and shoulder. This particular one, there's another chart of ULTA here, which is my back of the napkin type of drawing. But I said this is a double bottom, inverse head and shoulder, or you can call it a cup with a handle. Well, this is what happens. The handle broke. And if the handle enters this gap right here, because that's the gap zone, right? That's why it's in green. Then it's going to ratchet up real fast, maybe on earnings day after tomorrow. We shall see. Because we'll do the trade. We'll do a straddle with a long bias. Because I believe that Santa's buying a lot of makeup for gifts. So bottom line is that you got, it'll jump up to that upper end of the gap real fast. 233. You won't even have time to react. Don't forget what happened with AutoZone. Well, AutoZone didn't work like that. AutoZone was a beautiful swing trade day after day after day. Some days down 9 for no reason. That's just standard stuff. But I showed you where it's going to go, and it went there. It went there a lot quicker than any of you ever imagined. A lot quicker. We've been trading AutoZone from 492, 500, staggered trades. We keep on shifting, rolling over the options. Yes or no? I know it's a yes because that's what we don't update it every single day because some days it's down a little bit. Doesn't matter. Stick with the swing trade. Just roll out those options. People who did that got rewarded big time. I said 660 on a real optimistic basis. It went to 665. And with this type of momentum, it's probably going to hit 670. Well, let's stick to ULTA. Because these stocks are heavily pushed down and they're great companies. So that's what's going to happen with this. Now, can it have a failure? It hasn't even entered the gap yet, by the way, and it was up 12 bucks. It can get a lower gap rejection and fall like this. It can easily drop 7-8 bucks in a heartbeat and still continue its movement higher. Just keep track of this chart as I keep on posting it. Because without this chart, you're toast. I'm telling you right now. We're not even in the sweet spot yet. We don't even know if we're going to get there. I have no idea what the earnings are going to do. So we'll, according to do a straddle. Square. So here's a prime example of another fantastic stock that I basically recommended pre-earnings. Okay, 35 bucks. It fell hard, turned around. When you create a reversal hammer of this magnitude on the daily chart, you better be buying the crap out of that stock. Okay? Because after hours, most of the time, it's, especially on stocks like this too, there's a lot of retail players because after all, it's a $37 stock, right? At that time, $36 stock. So a lot of retail guys in and out. You drop 10 shares because you're freaking out, okay, that you're going to lose 360 bucks. So they'll drop the stock $1. That's after hours trading. Institutional is a different story. On large cap stocks like Amazon and stuff, when institutions are buying and selling, that's heavy duty stuff. But this is a lot of it is retail. Average Joes, retail traders. So turned around and it continued. It went from 34 and change all the way to 50. I'd already drawn these charts. You obviously want to be a seller at 50. Yes, it could easily go to 54, but you want to take this big move. And even if you caught a bunch of it, because you didn't look at the chart, you just talk to yourself like it's a dumb company, right? No pun intended to my good friend here, who said that, okay. So bottom line is, who cares a dumb company? The stock came IPO all the way down here. It's a really dumb company because you think that, because you think better than what Wall Street thinks or what the thing. See, that's the fundamental mistake about emotional investing. You can't put too much of your opinions there. Whether you shop somewhere, whether you buy toilet paper somewhere, it really doesn't matter. Whether you don't like the sound of that company, it doesn't matter. What matters is prices, structure of the candles, and this was a bona fide movement higher. Didn't mean it couldn't fall a little bit like it did. It went from 37, it was down like 3 and change after hours. And the bottom line is, and then you had the candle expansion. It's like, it's a given, buy it. So the same thing happened. So here's Square, we're a bit long around here, boom. When you see a candle like this and moving out, done. Get out of there. Then you're not looking at the charts and you say, no, I'm going to buy it. I'm going to buy it here. I'm going to buy it here. No, you got to look at the charts. What did I say? Wait till 40 to 42. Well, it went to 39 today. I said that yesterday. And we jumped in. Intraday Square trade. Didn't take much. They're not expensive. The 42 calls. I recommended the 40 and the 42. So give you one example. Went from a low of 56 cents to $2.40. Let's call it 60 cents. That's 300% reversal during the day. And then, of course, it's a volatile stock. But look at this candle. What is this candle telling you now? that all of a sudden square is going to become a bloated circle and just fall apart. No, you got to go with the higher probability trade. That's called tactical trading, not what the idiotic voices in your head are saying. And I got idiotic voices in my head too, much less than many of you. But that's why I don't make like emotional comments. So try to train yourself to be like that. It doesn't mean you can't have an opinion. Of course you can have an opinion. But most of the times your opinion will be wrong. I can assure you that. I manage money for institutions. I manage money for high net worth retail clients. I know opinions. And they are far richer than you guys. The type of people that I managed. And their opinions were dead wrong. So why is your opinion going to be so much smarter? Think about that for a minute. They're more professional. They're more not professional. They're wealthier. They have seen more. They've experienced more. They've run businesses, and their opinions about the stock market are dead wrong. So where do you guys stand? Where do I stand? Let's keep our opinion a little bit locked in the basement, right? So bottom line is this candle is telling you there's a massive short covering that happened today. I expected the stock to come and test this breakout level here. Didn't do it. So at this point, the chances are that the stock wants to go to about 44, possibly a little bit higher. This was a massive sell program on a downgrade from BTIG, I believe. So this is just a short covering rally. So we'll see how it develops now. This is not a stock you want to sleep with and say, okay, I just bought it. I'm going to just hold it forever. No, because it could very easily come back and test 40 again and then create a W pattern, what we call a dragon bullish, and then move fast and furious because that's what these ones do. We did that with Roku too today to 46, and you can make yourself some decent money. By the time, if it goes there, I have no idea because Square is definitely overvalued. But they got a lot of avenues. They're in the Bitcoin arena, right? They start clearing for Bitcoin, they accept Bitcoin, things. Boy, this stock is going to go a lot higher. So once it closes over the gap, then you can look at 52, 53, 54, 55. This did nothing today. So here's another picture, a very simple back of the napkin, like I call it, where I just take that sketch pen and just kind of doodle on it. And every doodle is worth a lot of money for you guys. So this is a cup, a double bottom. It's actually a cup. It's a W pattern. So I drew it as saying it's a cup and a handle, which looks like a bull flag. And this is what happens when you break out of a bull flag heading towards the gap. That's a good high probability trade. It might not. Their sales might be down. They might have been impacted by a lot of other online stuff. I don't know whether ULTA has an online presence. So I'm sure they do. So bottom line is, every company does these days. But if it breaks below, let's say, for example, right here, below 202, which is not that far, $15 for ULTA is nothing. If it falls below that, it'll fall back to 187 in a heartbeat. It can happen all after hours. So there's no given, but technically speaking, technically speaking, you got a cup, you got a bull flag here, and honestly speaking, it is liked by Goldman Sachs, which is good to know. Big boys like it. I hear a lot of opinions. ULTA is going to go up $30 and stuff. Okay, that's good. I'm long the trade. Took some nice profits off the table, but hey, I'm still net long the trade. So I'll buy that. But your opinions mean nothing. You have no frigging idea what's happening within ULTA. So what StockTwit says, whatever, means nothing. Because, you see, this is how traders project their own opinions into a stock. Because they're either losing money on it, so every time that they're losing money, it has to go up, it has to go up. Because it's a human nature. You want to feel comfort. Like, oh, I can recover my money back. So if I keep on screaming at it, I feel, it makes you feel a little good. But I'm not like that. Okay? So you can't keep on singing when a chart breaks, and this is definitely a positive chart, but like Regeneron and stuff, all right? And some of the people are in love with Regeneron. Some people are in love with Celgene. Well, I'm not seeing the chart set up. We trade it for a quick hour or two, or during the day, or maybe for one day. But to keep on constantly screaming and shouting that it's going to go higher is not going to do anything, but just keep on losing you money. You know why? Because you could have used that money to do my other trades and made 400% on Bank of America from 23 cents to a buck 20, or S&P calls from 30 cents. I'm sorry, from $1 to 10, and multiple other areas. It's a very hard habit to break. I don't know how some of you going to do it. I see some of you struggling. Do I feel bad about it? Yeah, a little bit. But it's not my business. I try to help as much as possible. You keep on getting stuck in a losing trade for days and days and days, where structurally the chart is broken. And you could have made back 5 times more on other multiple trades using that same capital. But you refuse to do that. Good luck. You deserve to be punished. That's it. So, bottom line is, what we're looking at here is that's the Equifax tab. One of my accounts got hacked. So, although this was a nuanced communication, we're playing it tonight. It's a big, nice and big, almost 1750, 1740. Here was the close, so that's a big gapper. Only one that's down is ADSK. That's recovering too. So those calls were around $3. My ones, the 131, so they'll probably be worth 40 cents. Who cares? Because nuance. And if you look at the aggregate stuff, because that's what I do, I buy the basket. This is up, way up. Okay, and and then you got that piece PSTG, which fell earlier. Looks like it's just ramping after hours. I mean, not ramping yet, but it's certainly recovering very fast. The conference call. Oh, come on. PSTG, Pure Storage. Okay, so stock hit that gap. Let's show this to you guys quickly. So here's a gap, right? Guess what it did? It hit that gap. So if you have, so some of you who go out there, you can buy the stock. You can't buy it at 1746, but it was probably there for 1 millisecond or nanosecond. You can maybe buy it at 1770, 1780. You can. And it ramped up, and you can make yourself a good point. So you bought, let's say, smaller amount, let's say 100 shares. Okay? Or 10 shares. How about that? You may want to make some drink money. So, boom, you can sell it for $1. 100 shares, you make $100. You buy a couple of 100 shares, you make a couple $100. All in a matter of 15, 20 minutes. Stock is here right now. See what happens, but it looks pretty okay. That's a big doji. I don't want to get into it right now. Want to learn about dojis, real dojis, and how they operate, how they make you a lot of money? Then sign up for the advanced coaching sessions. All right, so I'm going to entertain 1 or 2 quick questions because I covered quite a few important topics. So feel free to ask because I'm going to be signing off shortly. Go ahead, please. You have the privilege of asking the questions, so feel free to do so. And if you have no questions, then that's fine too with me. And while you guys are thinking what questions to ask, I will show you the weekly chart of the S&P 500 constructed weeks and weeks ago, if not months ago. What am I saying weeks ago? Months ago. Every single one of these moves we played. And this is where we are. This line wasn't drawn now. It was drawn weeks ago, months ago. What am I saying? It was drawn like April, May. Guess what the market did? It hit exactly that. What more can I do, guys? Imagine if I had a service which constantly kept on losing money. I have a service that 90, 80, a good solid 70 to 90% of the time, you constantly power trades. Yet, we have some people who leave. I don't blame them. They're weak. And they make excuses. And there are some people who don't join. I don't get that either, but maybe, like I said, they're commies or socialists. They don't want to make money. That's okay with me. So this chart of the S&P 500 is very powerful. Now we are at the upper end of the channel, so we have to watch this level very carefully. Very powerful stows. However, one thing of warning: at this point, the distance traveled from the 34 and the 50-day moving average is getting quite stretched. That's why we're going to have a correction very soon. Because the longer you go, further you move away from the highways. The 34-day moving average, the 50-day moving average, even the 20-day moving average, your standard deviation is quite large. That means you're veering far away from the highways you should be traveling in. I mean, close to be traveling in. So you will reset within the next, I can give you dates and stuff, but like I said, by mid December for sure, if not by the first week of December, and that reset will bring you closer down towards these levels. Now that's a big drop, guys. 100-point drop, or let's say 80-point drop on the S&P is almost 4 to 500 points on the Dow Jones. It's going to feel like the world's coming to an end. Okay? And it's not. It'll be a reset, a powerful one. It'll be like this. And we will then determine whether or not it's viable or whether the market really wants to go down. But we have had consolidations. This is a weekly chart. This after the last move in the market, which was back on February of 2017, which is a new high in the market. At that time, it was 2,400. If you guys remember we said 2,400. I was like, yes, it's going to 2,400. Went to 2,400 for for the following 1, 2, 3, 4, 5 weeks or 6 weeks. The market in between consolidated. And every guy on TV and all the trading services and stuff were like, that's it, it's over, the market can't go higher, it's finished. Then the market ramped, consolidation again. Then the market ramped, consolidation again. Now the market's ramping, there'll be consolidation again. So given that there are no more questions, I ask only 2 things from you guys. Number 1, organic marketing. Give us big shout outs on different trading forums. Let's get some good people in. We need to definitely grow our service. We are offering some unbelievable, consistently unbelievable through bad markets, ugly markets, good markets. Even in the toughest days in the market, I'm there. We're making money, or at least setting up the trades. I'm never disappearing. All right? That's a huge, huge asset for all of you. So definitely get the referrals, pass the word around, give us a bunch of shout outs because it does bring people in to check us out. And after that, it's my job to see, to help them as much as possible, teach them a little bit. And the other thing is start focusing on charts. What you think and I think mean nothing. Okay? Who's writing what? For a bunch of chat. Oh, okay. Yeah, thanks, Mike. Yeah, you can text me or email me. Mike's a good friend. Okay. On that note, let's reconvene tomorrow. It's going to be Wednesday. Wednesday is generally a red day, right? So we gotta be careful. But you're seeing the bigger picture of the market. And for some of you who are listening who still have not really tried to make some real money or any money or have joined the service, and you're scared, you don't believe in yourself, you think you can't make money, first of all, no one's really made 400% in their lives, okay? Overall. I'm talking people outside our service and stuff. They haven't. So they don't even know what it is. They don't. It's like, I'm not racist or anything, but it's like somebody from Burundi, but whatever, a farmer, hardworking farmer, and you give him $1 million in a satchel, and he's going to be like, oh, shit, what am I going to do with this before he lands up in Paris? But I'm just saying that that generally people don't know how to, so they don't know when real money, that they have the ability to use my service to make some significant money, so they sit aside. So take that step. It'll make you feel better, a little bit richer, and maybe make your partner a little bit happier. On that note, have a great evening. Welcome to Clueless Aid Trading. Stay focused. Do it! Who the hell was that? And whoever, who was that? JB? Whoever screamed like that, is absolutely a moron. Just letting you guys know, okay? Because that hurt my ears. So whether you're drinking or not, I don't care, but never ever on a webinar where a lot of people are listening and trying to understand things scream like that. And that's a warning. On that note, have a great evening. God bless you all.